Sorry, my main internet is not uploading very quickly, so I had to switch over to my backup. Please let me know if you guys are still here. I'm still getting warnings, though, from YouTube. It's a little slow. Cool. Muchas gracias, señor. Muy bien. And senora? Yeah. Guess we're good to go. 9:15. Alrighty. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right, if you're going to be a professional trader, you need to have two things: good data and good execution. On the execution side, the best thing you could have is straight through processing that directly ties you into the interbanking system, just like any other hedge fund or just like any other corporate or like any other bank, etc., etc., etc. So you need straight through processing. You get that through a type of brokerage firm called an ECN. It's an old name, electronic something network, right? It's a weird old acronym, but it just means they connect you to a platform, you buy and sell, and it sends you directly into the interbank system. So through liquidity providers, right? Sweet. Most brokers don't work that way. They just create a dark pool and you just trade against other traders inside their dark pool. And the assumption is all the traders are going to eventually lose. It's kind of like a casino. As long as they can keep you in the casino, they're going to keep all your money. That's how most brokers work. You don't want that. You want straight through processing. Traders Way offers that through their ECN platform. TradersWay.com. Go check them out. Do your due diligence, and you'll be just fine. One thing I want to let you know is that we are starting a stock market index trading group every Monday at London close. You will have live coaching going over how a professional trader who's been trading E-mini futures professionally for 6 or 7 years as their main career, okay, is a boot camper. Yes. So Peter Ward has agreed to drop by every Monday at 11:30 and show you exactly how he does what he does. Okay? Very cool. So that's going to start every Monday. So make sure you go to the community room, click on webinars, and then RSVP. Therefore, every Monday you get a reminder and you get a direct link. Bravo, bravissimo. Yet another upgrade for all members of TRADARS. This is for everyone that is part of the traders community. So it doesn't matter what membership level you have, you are in. Yeah, very cool. Nice, nice, nice. Boop, 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 boop. Boop, 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 boop. Okay, so what is TRADARS? Traders.com is an entire platform that automates both your technical and fundamental analysis. And on top of that, if it couldn't get any better, you get performance coaching as well, like the technical trading, like fundamental trading, like E-mini future trading. Very cool. So it's all part of it. Cool. Let's see if Google, they had some issues earlier today on their platform, which we built on top of. Yeah, and so it was glitchy earlier this morning. I see if you're part of the fundamental trading team, every morning we go through all the fundamentals, and some of the things were glitchy, but it wasn't us, it was Google. Like where's our dollar index? Although it is still loading. Okay, but anyway, so let's take a look. Yields are coming down. That's good. Oil. Oh my, that is such a good price. We might be able to get into some of that. Gold, is it going to try to get through 2,700? Maybe. How's the S&P? We will take a look at that. Bitcoin holding steady. Right now, there is still a bit of risk off going on in the world. Kiwi dollar still very bullish. Aussie dollar bullish. Okay. Pound bullish, which is interesting, obviously, because pound, Aussie, and Kiwi are strong relative to their peers. Well, that wasn't the same a week or two ago. At least Kiwi and Aussie must be influenced by the new stimulus package that was released last week. So that's the new thing, and it's working well. So Europe got some news today, and their CPI, preliminary at least, is below 2.0. 1.8 was the number, and that allows the ECB, if they so choose, to either cut more or cut sooner or cut faster. Green light for more cuts. So Euro CAD down, Euro Kiwi down, Euro Yen down, Euro Swissie down. What do you stink? A little bit of Euro action? Yeah. Neat, as they say. Taking a closer gander. Yeah. Although this ticked up, didn't it? So when we look at all the different constituencies, we can see what's going on here. Okay, long-term yields flat, yen flat, dollar up, risk off. S&P 500 flat, gold up, risk off. VIX up, risk off. Okay, money markets up, risk off. Okay, put call ratio, risk off. Ooh, yeah, cool. Very quickly look at the calendar, see what's up. Okay. Jolts at 10, ISM at 10. It's manufacturing, but 10 o'clock, we're going to have some vol. This is what I'm talking about. CPI in Europe used to be 2.2. Now it's 1.8. Green light to cut. ADP tomorrow. ISM services on Thursday. Okay, I imagine you've already reviewed the Commitment of Traders report. We did that yesterday. Capital stock. Okay. The market's low on Kitty Cat and Swissie. But they loaded the boat on Rand. Hey, could it be those high interest rates, yield hogging? For sure. Once again, you can see Google's a little bit slow. Not everything is built on the Google Cloud, just everything on the fundamentals is built on the Google Cloud. So anyways, Google's slow today. They only have $100 trillion. Are we going to wait? There we go. So the top is capital stock. The bottom here is capital flow. And again, I assume you've done all of this or yesterday or even over the weekend. So I'm not really going to cover it. I just want to remind you that it's there. Okay. Later. So today you got manufacturing PMI. Okay. Make sure you do your research so you know where we are and what it all looks like. Is it good? Is it bad? How do you feel? I covered that today in today's fundamental video. It's under the coaching section. So pro members and fundamental members of the fundamental trading team got that today. So that'll be today. And then later this week, well, you're going to get jolts, I think, today, right? So you're going to have jolts later today, and later this week you're going to have NFP. Make sure you know where we stand on these things. And then, of course, services will be Thursday. And this is all the type of research you can do if you want. Make sure you, once again, know where we stand. Is it good? Is it bad? Is it getting worse? Is it getting better? If you don't know that, you don't know jack. As a reminder, we've had some upgrades. Here's your seasonality. That's standard. We launched that 1.5 years ago. And shortly after, I provided a page that just shows dollar, since you're heavily influenced by reserve currency. Again, these are going to load. Google's slow. But it shows you what should be happening versus what is happening. It's good to know. You need to know not what's just usual, but you need to know if something unusual is happening. And then here's the latest upgrade that I announced 3 weeks ago. And you have week by this week, next week. Loading, loading, loading. Come on now. Come on, Google. You can do it. It's trying. To be fair, this is a lot of data. Like a lot. Millions of tables to generate all of this dynamically. But Google is usually faster. Now, I had slow internet on my Prime internet. The download was okay, but the upload was like way slow, like 90% slower. So maybe there's just a general internet thing going on. Google's internet is slow. I don't know. So I had to switch over to my other internet. So if you're a trader, you should have redundant internet connections. There we go. And it's doing month over month seasonality as well as week by week. The nice thing about a table format is you can find what you need quickly. You don't have to like cycle and randomly look at things. So I just want to give you an update on that. You guys like gold? Okay, well, we're rising technically. Gold is usually down in October and then recovery the rest of the year. So you might want to put that in your pipe. Okay, retail positioning, okay, is growing. Actually, no, it's not. Retail is shrinking, trend is growing, so they offset each other. Okay, so things are happening even though the score changed, this stayed the same. Cool. So anyways, you can play with this all day long. Pull up stock indices if you prefer. Okay. We have a score of negative, right? -3. Okay. We dropped quite a bit yesterday. Okay, yeah, we dropped quite a bit yesterday. And that has to do here. Okay, here and here. Drop, drop, drop. NASDAQ is better off than the S&P, but still also neutral. Trying to climb on that 20-day. But notice it's down and flat, 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 flat. It could drop down, and that could end up changing our direction. But I want it to go up. Seasonality likes it, all that kind of stuff. Seasonality is very good, and it got quite a bit better, but it hasn't happened yet. Interesting. You see the big jump in NASDAQ? That's why it has a much different score than the S&P 500. So you go NASI first and then probably build on S&P 500 after. But that's just, there's your seasonality. Okay. If this ticks up to a 4, it'll probably go green on us, huh? So it could be interesting if we survive this pullback. So let's go to technicals. Should be faster. It's not on a Google Cloud. It's a completely different server. And we can go directly to stock indices. Okay? And this is the kind of stuff that you'll be doing on Mondays. Okay? Huh? You guys happy about that? Every Monday at the London close, spend an hour going over stock indice trading scenarios? Yeah. Now, it's hosted by Peter. Now, think of it. Peter is just like you. Peter was an FX boot camper for many, 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 many years, and then was able to make a career out of it and has been trading, for 7 or 8 years, living the dream. Yeah. Amazing, right? Yeah. It's very cool. Living the dream. And he's not like living in the jungles of Brazil on, $3 a day, and therefore, is a full-time Forex trader making over $5 a day. No. He's a real person, has a real life, real expenses, real pressures. Yeah. Okay. So living the dream, even though the dream is reality, huh? So anyways, awesome. Super cool. So let's go to the longer term stuff first, I think. Okay. Now, these are sort of breakout moves. You should know this, and I'll have to put it in our training course. But even though it's a big move, it's already happened, right? So very often you have, it's an up move, then you expect some profit taking, and then resumption. Okay? That's kind of the general idea. That's just a heads up that it's happened. DAX, you got your breakout, huh? How do you trade a breakout? Up, 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 up. Tests resistance again. Do you buy it? No. Do you buy this dip? No. I mean, there's a scalp in there, but generally no. And then you get this breakout to the upside. Is that a trade? No, but when it occurred, it could be a scalp. But what's the best trade? Okay, and now you got yourself a trend. We went from challenging resistance, so scalping it up to resistance, to suddenly you can connect the dots. And that hasn't happened yet, but that's how you should put that on your radar. Remember, traders.com, radars for traders. Put that on your radar. What are you watching? This is the heads up. You got a breakout. Will you get a pullback, and will you buy it? Okay, well, those are all the good questions. Okay, up channel, so we have strength. Okay, strength. Okay, we test resistance, higher low, higher high, definitely up channel. The next leg of the pattern is down, so that's a threat for bulls. There are no bears. If there were bears, this wouldn't be an up channel. But if you get a pullback, and you know me, I loved roll reversals. Love roll reversals. So, okay, so that's the opportunity, but currently we're facing a threat. Okay, cool. And that's on the no diggity, no Dow. Does this fit with what you guys are thinking? Okay, 40% of you, more than a third, are risk on, yet there is no risk on right now. I want you to know that. For those that are risk on, you might be thinking ahead, but I can't confirm that you're right. Think about it fundamentally. When you look at 8 different groups of traders trading completely different assets, and they don't talk to each other. They're making independent decisions based on all the resources they have available to them. And there's no long-term trend between them. And the medium and short-term trends are down. So it doesn't mean you can't have a down up. It's just you're saying up, and there's no No other professional trader can confirm that. You might be right, and in fact, I think you're probably right, but you're trading out of position today unless things change. Let's say they all agree today is a buying day. Great, but I would still caution you to confirm it. This is why we have traders.com, so you don't guess anymore. Traders.com takes all the randomness out of your trading. Okay? Takes all the randomness out. Cool. Here's a Dow on a 4-hour. It's kind of interesting, right? Get my drawing tool. Okay. Up, 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 down, down. The pattern is if it holds at support, okay, resistance becomes support. Okay, if that holds, so that's A to B, B to C. Then the next leg is up. And then we're going to have that as support. So what are the legs here? C to D. So that's an opportunity. D to E. That's a threat because you don't know if it's going to reverse. Probably not. Okay. And then at some point, and what TRADARS would do, by the way, TRADARS would connect A to C and B to D. We don't know. That's the next pattern. Well, we don't know if that's going to happen. So if it goes up, then it will fall. Now, you could use the role reversal, or you could use the bottom channel. Okay? And then the next leg is this way. So C is an opportunity, E is an opportunity, D is a threat. Daniel says, hey, war in the Middle East might have caused a little spike in the market. Yeah, when has there not been war in the Middle East? Okay. I think there's much bigger things impacting the markets. But then again, I'm so far away from that, you know, it's not a reality to me, right? So I'm like, what are you talking about? Like, war in the Middle East, you know. But I guess if it's closer to home, you're like, oh yeah, you see it, you feel it, you taste it, right? Yeah. What I think is way more important is the Chinese stimulus package last week that has pushed up metals, Aussie, and Kiwi. Okay? Was that right, Denise? Yeah. Oh, I see, Daniel. Yeah. Unless there was a headline that just popped out. I can check that, though. Let me check the headlines. Iran prepping ballistic missile attack. That just came out. Okay. Maybe. We'll see. There's a difference between headlines and reality, though, so you got to be careful. Yeah. Okay. But it also could just be the stock market open. So, for example, we have this, right? That's what I expect to happen, me personally. And this is what TRADARS was warning you about. So, my Council of Investment Advisors, we're meeting on Monday, and I have money to spend, aka invest. And I'd love it for it to come down so I can buy it. Okay. So you got to do a trap and break on this one, right? Yeah. Trap and break, trap and break. If it goes lower low, then we're going to be bearish for a while. Notice it's also on top of the best selling pivot for bears. Okay? That's the best selling pivot you can pray for. Now, do you sell just because of that? No. But when you are at resistance and you've tested it multiple times, yes, for sure, that is a selling pivot. Okay, just so you know, the buying pivots are down here. Okay, this is the buy zone. I'll even label it. I won't label it, but I'll label it. Okay, this is buying zone A. And then let me take you out in way deep into the future. Okay, there you go. Okay. So if she breaks down below support, then support becomes resistance, and then we head down here and we start looking for up reversal patterns, bullish reversal patterns. Like, is it bearish reversal patterns leading to bullish? No, it's bullish, right? So anyways, a bullish pattern there or one down here. Is that helpful? I just want to make sure you don't think I'm backfilling everything. Okay. And this seems interesting. It's that whole zone. That's what the chart says, guys. Okay. Okay, yeah. That's cool. My WTI. Okay. Now I already planned all of this out for you. Look guys. Look. Look. Okay. So how about this? You want to look for a pullback if you've missed it. Maybe it is tension in the Middle East. Good. Then set it up. Okay, TRADARS is quite sensitive too. So you can pull it up and instead pay attention to the shorter time frames. Okay. Okay. See if they're under threat. Looks like we're under threat. Right? The yens are coming down. Is that right? That would be risk off. Yeah. Yeah, and see, all these little candles are seen in TRADARS already. The red candle, the red candle, the red candle. These charts are live. Okay, like for example, this came out an hour ago, but let me show you. Okay, there's the red candle that just occurred. These are all live charts. I don't know if you fully appreciate that. These are live charts. It's just drawing the patterns on the charts for you. Okay. Okay, so you could say it's the new news, or you could recognize we actually looked at these numbers two or 3 hours ago, and it was already showing bearish. Yeah. So maybe. Now, one of the things you may see is this is unusual price action. And under volatility, you'll probably see we'll break out of the implied volatility ranges. And here we go, right off the bat. You see it. So the normal 4-hour range this time of day is only here, and the normal range this for Tuesdays is here. We've already blown the doors off of that. One thing that might work is something like that. This is cool, right? Yeah. Let's turn Forex off. Oops. Clicking the wrong thing. Let's turn Forex off. I can do this. Come on now. Turn crypto off. And only look at stock indices. For those that want to trade stock indices and join us for our stock indice trading group, which all members at traders.com get, all members, any membership level gets you access to that. This might be a fun tool depending on the time of day and day of the week. Okay. So normally, for example, if you were a bull, normally, now we have something unusual going on, as you know, but normally if you were a bull, this would probably be a price you look to buy. And you'd put your stop just below this. And you can see it's already in play. So let's say under normal circumstances, if there's news, it's abnormal. But if you're going to trade normal circumstances and you're going to trade the Dow, okay, this is your trade plan, and your stop goes, let's do this in red. Your stop goes down here. And you probably won't get stopped out. Unless some unusual news, right? Unless a greater force is acted upon it. Do you see how this is cool, guys? Yeah, I already did it. Look at that, Peter. Oh my God. Oh my God. Coolio, right? I'm going to RSVP. Boop. I'm going to add it to my calendar. Boop. Google. Save it. Done. Lovely. Tuljumum. Solid. Yeah. Now you have to change your name from Trader Ward to Tradar Ward. Anyways, so what I was saying here is this is one way to use your implied volatility. Ooh. Okay? That's one way to use implied volatility. Okay? Is you're like, okay, this is normally the bottom of the range and we have achieved that. And if you're a bull, you might want to look for that. Now, you can further analyze this and say, well, that's a giant maybe, but you don't like this direction quite yet. Okay? All right, that's fair. And you're looking for maybe tomorrow's move of a down and an up. Yeah, well, you're still using the tool properly, right? Cool. Right? Coolio, right? Yeah. Okay. Oh, I just noticed Denise doesn't have a cool blue name. Boom. Denise, you now have a cool blue name. You should test it out. Type something. When you look at seasonality tool, yeah, do you take the calendar week number on QuantBox or the real week number because you're... There you go. Well... Michael, it just happens to do with when the year starts, and do you count like the first one is a half week? So they might be a week off, but it doesn't matter that much, right, Michael? In the sense like you don't say, oh, week 49 is going to be up and week 50 is a sell. No. What you want to do when you go to that side, okay, let's go to fundamentals. You want to create windows, okay? It's windows that you want to look at. Because really what you're looking for, Michael, is where tops and bottoms of the market are likely to form. Okay? So for example, okay, the gray line is what's happening this year. I don't even know what this asset is. It's just random. I didn't even pick one. But it's fine. Let's use this because then it's not specific. Okay, somewhere just before or just after February, the market tends to fall. So 4 weeks later, it fell. Oh, thank you, Bernd. Somewhere around April, this market tends to rise. Okay, somewhere around May, just before, just after, it tends to fall again. Okay, cool. Somewhere around August, it tends to fall. Well, it didn't do it this year. Yeah, okay. But here is a window where it tends to stop falling and continue to rise. Somewhere around November, it could be just before or just after, it tends to fall. And it gives you a shape so that you can prepare it. But I wouldn't do it this way, like this has to be the buy week, week 12. And you're like, well, if you do it on a different one, it'll show week 11. Or if you Google it, we're not on week 40, we're on week 41. It doesn't matter like that. That's not how you use it. You don't say this has got to be up and this has to be a down. No, you look for that. So you're like somewhere in this vicinity. Oh, it won't let me do that way. Okay, somewhere around week 29. So a week or so before or a week or so after, the market stops falling and tends to rise. That's how you want to use it, like somewhere around here. So for, let's say, every candle, you have to have a minimum of a 3-week window. And this is where it tends to bottom out. This is where it tends to top out. Tends to be where it bottoms out. This is where it tends to bottom out. This is where it tends to top out, or whatever, that kind of stuff. Give yourself windows, not exact week for week, up by up. Because there's an average. And the classic example I've been giving lately is you have a rich man and a poor man. The rich man has $100. The poor man has no money, lives in a back alley, in a trash can, doesn't know where they're going to eat, hasn't showered for 3 weeks, okay, is wearing dirty clothes. But on average, they both make $50 and have enough to live. So cheer up, says the rich man. On average, you're doing pretty good. But there is no average. Like, average is nothing. It's a human construct. You could never have average. You could have, right? Like, just think of a room full of rich men and poor men. And you're like, well, everyone's doing good. No. Yeah, it's an illusion. So, like, think of it this way. I would never buy that. But I'd be ready to buy that. Somewhere in this period. And so if suddenly it's been falling for 6 weeks, hits a logical level of support, and I start to see reversal patterns to the upside, I say, ooh, that fits my window. I'll take a shot. And not only am I going to take a shot, but I'm going to hold it for a month. Not a day. Cool, right? Let's go to the scalping tool. 1 minute. Okay. If actual is less than, then you can pick all these different things. Okay. If the actual is greater than, that's what's going to happen. What if it comes out equal? It never comes out equal. So how do you make sense of the number, though? Okay. Well, that's where the fundamentals come in. So once again, I'm assuming you did all of this. You have all this at your fingertips. Okay? You have all of this at your fingertips. So we're looking, we're well below average. Now we're looking at 7.67. Really? Really? Seems like high is more likely than low, but again, that's a guess. Okay. Cool. Get our number here. Jolts 8. Told ya. Boom! Shalaka-laka. Dollar gets strong and everything is already weak. Risk off, Bubba. Okay. Oh, burned. Nobody knows about that. That's a secret. Okay. Favor wants seasonality for gold. Pay the money. You got it. Cool. Anyway, so 8.4, and we're like, yeah, that's, oops. Did I dump it? I dumped it, right? 8.4, or is it over here? Yeah, 8.4 was just unrealistic when you looked at it. 7.64 was just unrealistic. And we had the data so we could put that in context, right? So actual is greater. And the threat now, though, is that because we have some potentially geopolitical news, that might influence the result here. But 66.7% of the time, euro dollar falls over the next 4 hours. So I say, hey, man, show me what you got. How did you get to that conclusion? And you can see there has been, back in April, a spike and then a slight close low. All right, it's not that much, right? Drop, pull back, continuation, slight low close. Whatever. This one went up and then a low close. I mean, it looks like up. I mean, I guess to up for a half an hour. Like, all of this it's just not clean, right? It's just not clean. Oops, I'm opening the wrong ones. But anyways, it's not a clean trade. Okay, and for those that are part of the news trading team or pro members, you also have these scalping opportunities. Now, for some reason, these scalping opportunities are high time frame. These are day trades. But they're scalps because it's like trade the break. I don't like to trade the break. I like to trade the pullback. And even then, it looks rangy to me. So I pass on this, but you might like it. Okay? So, for example, this was thrown out to you. Let's put that in a tab. This was thrown out to you on the break. Okay, so right here, you can see the vertical line. And there's the target. It's just a little breakout. Not my favorite type of trading. But short at 180.50, target 180. See, it's a 50 pip trade. Now, you might get a further breakout. So you could take, let's say, half your trade off here and try to let the other one run, because then what will happen is you'll get the pullback, and then you can add this one where you took profit, your half, have it come back, and you re-add it here and take the same trade again. And now you trade it into like a swing, a day trade into a swing trade. Okay? And based on having seen that kind of stuff before, okay, there's a 76% chance you at least get to the bottom of that range. It's cool, right? I mean, you love it, right? Are you not blown away? You're like, oh my God. Oh my God. And so it makes this, by the way, looking at all the breaks of support. And there are thousands of these. And then it says, on a pattern like this, on a break of support like this, having seen 1,000 of them before, or maybe 2,000, how often does it actually just go to the bottom of the range? 76% of the time. Oh boy. Yeah, dude, shut the back door. That's some pretty cool stuff. Okay? EuroCAD breaking down potentially. You might be able to carry it through. That one just started. Okay? 7 o'clock this morning. This one's 7 o'clock this morning. Hey, so these are all 3 hours old. You should already be on them. This one came out 5 o'clock this morning. It's the pound CAD, but on a higher time frame, huh? Yeah. Higher time frame. So it's not really a scalp, is it? But once again, the entry, what was it? 180.50? 180.33. Your stop at 180.75. Okay, so 40 pips stop. Target level 79.40. So about 100 pips. Risking 40, going for 100. Cool. It's neat, right? It's not bad. So anyway, so look, we used the calendar in real time to get the news. We used the scalping tool, right? For the news radar, we used the scalping radar. We used the volatility radar. We used the technical radars. We'll come back and we'll do some more here on the technical radars. And we started with the fundamental radars. Okay, can you see? It's a complete package, and I'm building stuff right now that's going to elevate this even further. Cool. So anyways, there's no reason for you to be trading blind or uninformed like an amateur. If you do it, it's negligence, in my opinion. All right. So let's take a look at crypto. Let's do some crypto. All right. We'll do some crypto. Let's get off of some of these. I don't want these key levels. Those are like the scalping things that we just looked at. I don't want those. And those are that are building, but the other ones are already in play. I don't want Gartley reversals, especially on vol situations. So I guess that's enough. That's enough. Let's just limit what we want to see. And on crypto, okay, we have a big move. Okay, a big move. So how do you trade a big move? Well, a big move has already happened. Oops, delete. Okay, a big move has already happened. So TRADARS is like, hey, did you notice this? Great. So what's the next move? Down. Because it's already happened. And you want some form of higher low. Burned, I don't have that capability. So the service, the data providers, it's not an easy thing to just add, right? So like I can't have to be able to do what you're asking, which I think is like, you want to trade XYZ stock that's listed on the DAX, let's say, or S&P 500. And you want to trade that individual stock. And you're like, well, you have individual stocks. Why can't you just add one that's not on your list? That gets actually really complicated on the back end. So we took the, let's say, most common. That may not be the right, most popular. But then you're like, well, this other one has higher volume and this one has higher volatility. We took the best representation of what everybody the vast majority might be interested in, and we also have good data for, because it all comes back to the data. And some things, it might not be enough volume to even get good data. It could be choppy. It gets, one day there's lots of volume, the next day there's nothing, and it looks like gaps in the data. And oh my God. Yeah. But, this is so, it's so sort of indicative of what most people want. Adobe, AMD, Alibaba, Amazon, Apple, Baidu, Broadcom, Chevron, Exxon, Google, Intel, Meta, Microsoft, Moderna, Netflix, Nike, Nvidia, PayPal, Pfizer, Tesla, Visa, and the 10-year T-note. I mean, that is multiple industries or sectors and inside of multiple indices, right? So you're like, it's pretty good. if you had like one that you thought was amazing and like you're like, why do you have Moderna? Well, when we did the research, that was what people wanted. If you're like, man, there's a glaring thing missing here, you should add it. Yes, I probably might be able to. But to be able to let a member do it, individual, no, I can't do it. But you can customize what you see, and you're like, I don't want Moderna. Now, energy might be good, but you're like, I'm ethically against it. Okay, whatever. Turn it off if you don't like it. Okay? Suppose what I could do is get rid of like, why can't we just call it Adobe? Why can't we just call it Microsoft, right? That kind of stuff. You don't like Chinese stocks. Okay, turn those off. You know, and you can customize your portfolio that way. So it's pretty good. Yeah. But that would actually be quite difficult. All right. All right, taking a look here at crypto. Look at things popping in now, huh? 13 minutes ago, 13 minutes ago, 13 minutes ago. It looks like down, doesn't it? Channel down, weakness. Sell at the top, opportunity. Channel down, weakness. Sell at the top, opportunity. Channel down, okay, sell at the top, opportunity. Now, when we look at these, let's just pick on Litecoin, for example. Okay, yeah, the vertical line is here. So it noticed the break of this little range after the kick of the top, you see? Yeah, so you might be able to carry this down. And I'm doing a course, by the way. I hope you guys all want to attend, but I'm going to explain that this is a primary. Yes, that says primary. That's a primary, and this is a secondary line. Okay? And the secondary line is just a guide. It's a suggestion. Okay? But it could easily do something like this. The primary line is solid. Under no circumstance can it do this. That would break the pattern. Okay? But an acceleration because of a change of news or whatever, an acceleration to the downside does not break the pattern. An upward move breaks the pattern. So in this case, because it's a down channel, the green line is the primary. And it will always hold until it doesn't. Okay? So if we're up here in the future, it's going to hold. And that is going to be a sell every time. But it could accelerate later, right? And it's still bearish. Okay, anyways. So something's going on, huh? Dollar strong. What do you think? News related? Yeah. Isn't it nice, though, that we're updated that quickly? So right at 10 a.m., boom, boom, boom. Look at this, not that. Okay. Yeah, I heard that favor. Just become a member, I said favor. You ask every day. Just become a member. You'll have access. You want access to the fundamentals tool. You can do deep dive research in all kinds of seasonality, week by week, cumulative, non-accumulative. You have all the data, favor. Okay? So like I come here in the morning and I spend an hour with you, your hour of power, and I'm showing you how you're supposed to be trading. Cool. This is how you're supposed to be trading. Now, of course, behind I'm a bit motivated. I want you to have these tools, and I need you to help me pay for them because they're not cheap to build and manage and run. So it's like, dude, your questions are fantastic, and I'm here an hour a day to show you how you should be, but you need to be doing this all day, every day. Like this 17 minutes ago, boom, you need to be looking at this stuff. So my hour of power is helpful, but I'm doing it from an educational point of view. Like, guys, this is what professionals do. So you have a choice. You can do it the hard way. You can do it. It takes a lot of time. What most amateurs do is they don't do any of this. And some guru told them, all you need is the stochastics, and you buy at the bottom and you sell at the top. Well, A, that's too simplistic, and B, it doesn't work. Okay? Instead, you need a holistic professional overview of the world, and you need to know what everyone else is doing. Right? So you need all of this. So I'm trying to show you, like, this is the thing you've been looking for. This is the thing you've been praying for. You've been on your hands and knees and like, please, what am I missing? Please just give me a sign. This is it. Right? Fundamentals, technicals, and performance coaching. Hey, why don't you hire a Harvard, an economist trained at Harvard to work for you? Yeah. Yeah. Well, it's going to cost you a few $100 a month. You're like, dude. Okay. Dude. Seriously. Now you're running your family office, we'll call it. Okay. Okay. Emerald says, I couldn't get the price of the training course on the platform. Okay. Let's take a look. You get, on the base subscription, courses, coaching, and community access. 100 hours of educational video lectures, interactive community of like-minded traders, and live coaching webinars covering fundamentals and technicals, like the new E-mini, right? The new stock indice trading every Mondays, every Tuesdays. Like today, I'm covering fundamentals where I download all the economic reports over the last week and actually read them with you. Every Thursday, we do swing trading where we plan the rest of the following week. We plan everything days in advance. What's the price? That's all of this is $97 a month. And the plan is to add crypto. The plan is to add performance coaching. The plan is to add price action, more and more and more. And fun events like movie night. There's challenges to get you to think different. You can communicate with the other traders. All of this is $97. It's so stupid cheap. Yeah. There. Now, you can add to this. Okay? Remember, it's Traders Base plus Traders Team. So you don't need the base and this. It's the Traders Base. Okay? You get this base plus join a team. Technicals, fundamentals, news trading. There's stuff going on every day on this stuff, on these teams. So it could cost you $100 a month or $200 a month. Do you want everything? Well, it's $600. No, it's not. It's $300. So I really think you should have this because it unlocks like the scalping tools. It unlocks the fundamental tools. It unlocks all the all the technical radars, and it unlocks all the training and the community and everything. Yeah, it's $300, 50% off. Obviously, I'm enticing you, right? Take that one. That's the one you want. But hey, if the budget's tight, then I allow you to pick what is most interesting to you. You're like, Wayne, I'm really good at technicals. I kick ass. But what I'm struggling with is fundamentals. Cool. Join the fundamental team. I will make you an expert. You get quote unquote Quant Box plus Quant Box Live plus the Trader's Base, which includes the courses, the coaching, and community. Dude, for $200, that is a boatload of support. Boatload. Imagine multiple times a day you'll have access to coaches. Multiple times a day. Yeah. Yeah, sweet. But this is the best deal by far. So there you go. That's how you do it. All right, I got to go, babe. That was real. Peace on earth. May the pips be with you. May your profits be above average. Remember, when you have TRADARS and Trader's Way, you got the complete package. You have the entire platform for all your trading and investing research and analytics, plus execution straight through processing of an ECN. Dude, that is the dream. And the thing is, you can make your dream your reality or not. That's up to you. So again, peace on earth. May the pips be with you. May your profits be above average. And let's see what happens when I click end stream today. Fingers crossed.